Tuesday's open, it's all down a quarter. And then, of course, towards the second half, the selling accelerated on Tuesday, the last session. We'll see what happens today. 80 lower on the Nifty now, 24,630. The Sensex is down 300 points. The Bank Nifty is down 270. That's about 0.5%. Small mid-cap index is flat. Small-cap index is a little lower. Nifty heat map. So it's 20-odd stocks which are higher, and the rest of them are starting the day in the red. So that is the overall picture. Surabhi.
Okay, let's take a look at some of the stocks and news. By the way, Interglobe Aviation, 4% lower as those deals are getting done. 2.2% of the company's equity has changed hands. That's a stock in focus. It's down about 4% as of now. On the Nifty, it's 110 lower, so it's worse off than what the implied open was telling us. And now 24,600 is in question. So the pressure is here. Financials that are actually leading the decline today. So Shriram Finance, HDFC Bank, ICICI Bank, Jio Financial, a lot of these stocks on the lower side. Kotak Mahindra Bank as well. Financials are lower, but then the other heavyweights are not really countering this downward pressure. Reliance itself is contributing to it. It's 0.5% lower. ITC, 0.5% lower. So you don't have any help coming in from these names. Even Bharti Airtel, again, 0.5% lower. So financials plus a couple of these heavyweights. On the upside, it's really the Indian consumer. That's where the hope really is. Whether you're talking two-wheelers, whether you're talking FMCG, Hero Moto, 1.5% up, Eternal, 1%, Eicher, 1%, Asian Paints, Lever, Bajaj Auto. It's really all hopes on the consumer. The Nifty down 130 this morning.
Well, even if you look at the broader markets, it's all about the consumers. We have a bunch of stocks which are doing well, but even as the financials are not doing particularly well, we have one which is outperforming. That's Edelweiss, because there was a large trade that took place. Sunil Singhania's fund bought stake out there. The stock ended about 7% higher on Tuesday's trading session. Right now is opened about 4% higher, so keep an eye out on Edelweiss. The other one where there was a large trade is also, Veranda. That's up around 1.5% at the open, though Edelweiss has given up its early gains, now sitting with a gain of just about 0.5%. Veranda is the other one, which is up around 1.5%. Interglobe Aviation, the trade has happened. 2.2% equity has changed hands. The block posts were about 3.1% equity, so it remains to be seen whether the entire clean-out trade has happened or not. Or has there been any slippage yet on that one? Because the stock is still lower by about 4%, and it's lower than the large trade price as well. So we'll just keep an eye out on that one. The large trade has happened at 58.38. The stock at 58.13. Not all of the equity has been exchanged, or all of the expected equity has been exchanged. So let's see whether there is some more supply on Interglobe Aviation. Hatch and Agro is actually doing well. So that's another consumption theme that is coming by. Dairy play, so that's the one that is up around 2.5% at the open. Again, now up around 0.5%. Kitex Garments continues to see sell-off. So all these export-facing names. And this morning, in particular, we have the oil and gas space. In particular, Mahanagar Gas and Petronet LNG. Both of them are slightly higher. And then you have a long list of two-wheelers and retailers, the Indian consumer-focused names, which are doing well. So be it TVS Motor, Hero MotoCorp, Avenue Supermarts, or Eicher, all of them marginally in the green.
Okay, 136 points lower now. So 24,576 is where the open is now settling. Just 2 minutes, 2.5 odd minutes into market open is what we are looking at. Just a few other names. By the way, it's out of the gates for now and early, but it looks like 2:1, a little over 2:1 declines to advances ratio. At this stage. So 1,500 stocks are lower and about 700 stocks are higher. I'm looking at all traded NSE stocks for now. Just Vikram Solar, I want to put it up. It was listed second day in the listed space, right? Listed on Tuesday, 4% higher on Vikram Solar. Should come up on your screen. Hero Moto, I think we mentioned it, 1.5% higher. So yeah, it's coming up with decent-sized volumes for now. Ola Electric is back up, back above 50, so it's 52 odd rupees now. Second largest volume-led gainer. It had this massive move from 40 odd bucks straight to about 55, and then sold off to about 48, all in a matter of about 10 days. Trying to come up, back up once again. Eternal is up 1%. DMart is up 1%. These are some of the biggest volume-led gainers. JTEK is up about 12%. So 145, and that's a very large move which is coming through on very, large volumes as well. For this point in the day, look at that, almost, 1 million shares? Close to it now. E2E is up 2.5% as well. And I can go down the list, but volumes start to disappear very, very quickly beyond a point. So more, as I said, in a bit. Let's welcome in Gautam Shah, founder of Goldilocks Global Research. He's with us. Gautam, good to have you with us here. Thank you very much for your time. We had a decent move, Gautam, 24,300 to about 25,150 in 6-7 odd trading sessions. And do you think we go back to the lows that we saw, with the recent lows basically, which was the 8th of August, 24,330? Those kind of view not very far away, 200 points away. You think that's the first stop?
Good morning, Prashant. I think you need to widen the lens a little bit, because if you look at the last 1 year, the Nifty has generated zero return. I think last August we were around 25,000. This August we are at 25,000. And in this period, the market has handled a lot of adversities. It started with the FI selling, then issues around economy and consumption, then geopolitics, and now the Trump tariff. So actually, the market has handled a lot of adversities. And in this period, the one thing that has really protected us is really domestic liquidity and the fact that 27,000 crores is coming into the system every single month. Had the support of liquidity not been there, our markets would have been 15% lower than where we are right now. So I think this battle has played out over the last 1 year. I think it's really all about discounting. And I think with what's happened with the Trump tariff over the last few days, I think most of the discounting on the negative side is done with. I'm still not very negative about the markets from a medium-term, long-term perspective. I think the charts are still in good shape. But the sad part is India has become the poster boy underperformer after a long period of time. Because if you look at the world right now, US markets are at lifetime highs, European markets are doing well, China is at a 10-year high, markets like Singapore are at a 10-year high. And in this environment, you have India underperforming. So I think eventually India will have to join the party. So if you're somebody looking at markets over the next 6 to 12 months, I think this is an opportunity to buy. In terms of levels, 24,200 to 24,400, I think is a very important support area. Until the Nifty is above the same, I'm tempted to believe that this discounting of all the negative items will take place and the market will gradually move up. Because I don't think it can really get too much worse from here. And the GST push, I think, in some sense is a game changer, which I think the market realizes. So I think once we are trading above levels of 25,000, the ball will set rolling for the next phase on the upside.
Gautam, just a view on the market itself. You said that 24,200 is an important support, 24,200, 250. But thereafter, you also qualified it by saying that the market will only gradually move up. So you're obviously not expecting it to do a bazooka up move back to an all-time high. So it will just walk into the party as against stride into the party or dance into the party is what your belief is, right?
Well, over the last 5 years, we've seen enough bazooka up moves. And I think people have got spoiled in believing that every single time the market will run up as if there is no tomorrow. But let's not forget, we are still one of the most expensive markets in the world. And there are concerns around the economy, which is the reason why the Nifty itself has not been able to build up on the gains. But I think from a near-term perspective, over the next 2 to 6 weeks, I think the market will aimlessly stay in a range. It will be volatile. It will give you periods of greed. It will give you periods of fear. I don't think it will break out or break down. So my working range is 24,200 to 25,000. In this period, the Nifty is going to just stay stuck. But eventually, I think there are higher chances of a breakout on the upside. And as we've been maintaining all along, I think this is a stock-specific market. Forget the Nifty, forget the index. Look at pockets in the mid caps and small caps. That's where the big opportunity is. And that's where outperformance is going to be over the next 6 to 12 months.
Absolutely. You've been saying that while you've retained a positive stance in the market, Gautam. You've always been maintaining, I think right from April onwards, this is going to be a more stock-specific market. Before we talk about the sectors and the leadership, because there's absolutely no leadership in the Indian market. That's the problem, right? I mean, now everybody's pinning their hopes on consumer and FMCG. But before we talk about sectors, just to complete that correlation analysis, I mean, if there's one thing that this year has taught us is that correlation of the Indian market with the US market, that's been broken. But is that just a phase, or is there something longer term structurally that you see changing when you look at bigger charts like, whether it's the dollar, whether you're looking at the 10-year bond yield, US bond yield, or even US equities themselves? Is there a bigger message out there than just a small period of underperformance here in India?
Well, I hope there is no bigger message here, because I think over the last 20 years, India and US have pretty much moved hand in hand. We've seen this all along. You can put both charts together and you will see tops there lead to tops here, bottoms there lead to bottoms here. It's just in the last 3.5 months that India has gone the other way, but usually they meet, and I think they will meet on the way up. But the bigger problem which I have right now is I think China is probably the next big opportunity with what it's done in the last 2 months. And there is a very clear case of possibly India underperformance and China outperformance over a period of time. That doesn't mean that India will not deliver returns. It's just that it might not deliver relative returns in comparison to China. So India-China, I think equation has changed quite a bit. And I think that's a new mega trend over the next couple of years. But US and India, I think, will move hand in hand, because you can't have a global equity market bull run, which is what we are seeing right now, and India not participating. We are discounting the negatives. Hopefully that will be done with over the next couple of weeks. And then we will be back joining the rest of the world.
All right, we take that point. Just hold on, Gautam, as we ask you about your market sectoral views right now, because just as we speak, there's been a sharp downtick in the frontline indices. The Nifty is now just around the 24,540 mark. At one point was threatening to break that 24,500 mark as well. And it's across the board selling. So you have three large weights on the index. We have the Nifty Bank, which is down by about 0.8% after underperforming for a while on that one. Then you have Reliance, which is not doing too well. And now today, we're seeing a fresh bout of selling in the IT pack as well. So the IT index is down about 1.5%. Remember, on Monday's trading session, the IT index actually supported the frontline index, and as a result of which the Nifty was up around 100 points. But the last two trading sessions, the IT pack also has begun to see some sell-off. So the Nifty now, for all practical purposes, is also below the level from which it started to rally after the Independence Day speech on the Prime Minister. So the Nifty before the Independence Day speech of the Prime Minister was closer to 24,560, 24,600 thereabouts. Then the speech came in. The street liked what was said, especially on account of consumption uptick. In the next few days, we saw a rally all the way up to 25,134 thereabouts. And now we're back to levels below that. So we've erased all those gains.
No, absolutely. And it's important you point that out, Mangalam, because if we talk about the entire compression the market has seen in the last 3.5 odd months, now we're barely 200 points away from the lowest point of this consolidation patch. The low the market hit, just to reiterate the levels, was 24,337. And this was earlier in August, to be specific. The low that we hit was the 8th of August, 24,337. And we are exactly 200 points away from challenging that low. So it is tough. It's a tough morning of trade. And it's been a tough reaction to those 50% tariffs as well. Just to reiterate the range that you put out for the Nifty, Gautam, you said that your working range in the near term is 24,200 to 25,000. Is that right?
Yes, that's the band in which I think the Nifty will just try to find its footing. And 24,200, I think, is a very important support number for me as a technician who looks at the weekly and the monthly charts. But I think the bigger point is, don't look at this market day to day or the next 2 to 3 weeks. I think it's very messy. It's very noisy. If you take a more 6-month to 12-month perspective, I think there are some amazing opportunities, with a lot of margin of safety and risk reward. So, I mean, if your lens is 6 to 12 months, the market is a buy at today's prices.
All right. And, while this range continues, what are your calls on the sectors? Which of the sectors appears a little more oversold and perhaps as a result of which a better investing opportunity? And which are the sectors where you believe that, there is not a lot of upside left?
Well, I think the problem has been leadership, as you all alluded to. I think because IT has been in a very difficult space, Reliance has gone nowhere, and the Bank Nifty has seen quite a big hit in the last 2 weeks. When the three big pockets of the market don't do well, it's not possible for the Nifty to build up on the gains. But I think eventually Bank Nifty and the financial services sector will have to carry the market because valuations are comfortable, flows are still coming in, and the top banks are still very well placed. And they really don't have too much impact of what's happening in terms of foreign policy. So given all of that, I think Bank Nifty somewhere between 53,500 to 54,000, I think, is an opportunity. And we do like the entire NBFC space, and I think they can definitely be bought into right now. The two other sectors that we like are auto and metals. Auto clearly spurred by the recent GST news flow It's visible on the charts, and I think a 15% move on the index is quite likely, followed by metals, which hasn't done so badly in the last 2.5 months, despite all the negative talk around it fundamentally. I think metals is also a big opportunity. But as I mentioned earlier, it's a stock pickers market. So you go mid caps, small caps, there are various pockets there, power, infrastructure, fertilizer, where I think the opportunities are immense.
Specifically, what are some of these consumer company charts telling you, Gautam? Let's say two-wheelers or even four-wheelers. Suddenly there's some sign of life even in a stock like Maruti. And then FMCG. Now, FMCG, not sure if it's a hope trade or if the charts are indicating that there is some bottom formation, whether they have the energy building up for a more substantial up move.
Well, auto, we are quite convinced that this is a genuine move, and I think it's going to lead to a lot more upside. I think the top 4 or 5 names, we like all of them. In fact, we covered officially a couple of them at Goldilocks recently, and I think the index is likely to appreciate 15%. And it's very clear, I think the GST push has triggered that breakout on the chart, and it is here to stay. So we are seeing relative strength. But FMCG, I think, is still a problem because it's the mirror of the economy, and the FMCG index has been underperforming since October last year. So it's been 10 months of underperformance. And the problem is they're all still richly valued because we sold them as the India story. All kinds of valuations were justified last year, and now people are facing the heat because they are underperforming. I still don't see an opportunity there. I would stay away. I'd rather go with services. That's probably the reason an Indian Hotels and Eternal is doing where it is. Not a recommendation, just an observation. Services consumption is probably for me a bigger opportunity than product consumption.
That's an interesting one, services consumption versus product consumption. We've seen that in a lot of the hospitality names and even IndiGo. Speaking of IndiGo, by the way, we understand that the deal size has been curtailed. So the earlier large trade that took place, which we said was 2.2% and not the entire size of the purported 3.1%, was because the deal size itself has been curtailed. We'll obviously get Vivek to talk a little more about that, the reasons, etc. for it. The stock, however, not particularly happy with that curtailment of deal size, and it's down about 4.5%, so below that 5,800 mark for that stock as well. Gautam, you said there are a lot of opportunities in stocks, so let's get very direct. Specifically, what are the 3 stocks that you like?
Well, I don't want to speak about specific stocks, but there are certain themes which we like over the next couple of years, and I think today is a great opportunity to buy into them. Possibly power, if you have to play the India story. Power, infrastructure, and clean energy, and hotels and travel. These are 4 themes that we really like. And the moment the market stabilizes, I feel that these 4 themes can deliver supernormal returns. Power is a no-brainer. Infrastructure is a no-brainer. Clean energy, I think we've done a lot of work around it. And I was at a couple of events, and I think the thesis is very clear that the world and India is moving towards clean energy. And a lot of stocks are being ignored right now. But again, if your lens is 2.5 years, that's an opportunity. And travel and hotels, I mean, the winner takes it all. Look at what IndiGo is where it is. Look at where Indian Hotels is where it is. So I think this is again a mega theme, which I think will play out. Valuations are comfortable, and I think these companies enjoy great market share, and it's only going to get better and better for them over the next few years.
There's a lot of downside pressure on stocks now on the large cap screen and on the mid cap screen. So today's fall hasn't spared either large, mid, small, nothing. It's all down, and financials are taking the market lower very, very clearly. So if you look at the Nifty and this 200-point drop, then a lot of it is finance. Shriram Finance, HDFC Bank, Jio, and so on and so forth. But the problem is there is no counterweight either. Stocks like Reliance, Bharti, everything on the downside.
This is banks and financials. That's what I was talking about. And by the way, it's not now. It's down 1%, but it's hugely underperformed.
Yeah.
So while the Nifty is still not at the lows. Nifty, by the way, had a good retracement. 61.8% of the entire fall. The Nifty retraced. The Nifty Bank did not even retrace 38%. So there was no real momentum, and that's the economy-facing part of the market, which is relatively speaking underperformed in a big way. I don't know if Gautam has a view on this. Gautam, Nifty Bank.
Yeah, as I said, I mean, if you look at it over the last couple of months, it's been an underperformer, no doubt about it. But can it really collapse from here? Can it get into a sort of a bear market? I don't think so. I think till 2 weeks back, you had HDFC Bank at lifetime highs, SBI doing well, Bajaj Finance holding out really well. And these are companies with solid earnings and nothing to do with what's happening with the US. So I wouldn't be too negative. I know that it's high beta and therefore it's correcting. But as I said earlier, somewhere around 53,500 is where your most important support is, and that's where the 200 exponential moving average is. So risk reward from a more 3 to 6 month perspective for financial services right now is in favor.
Okay, all right, we'll take that. So keep the longer term lens on, not the near term noise. That's the advice from Gautam, and in all probability you'll end up making money. And these are the times when the market really tests our patience and our nerves. So important advice. We'll keep it in mind, Gautam. Thank you very much for joining in. Right now, it is a morning on the downside where the Nifty is now struggling to hold on to 24,500, very close to going back to 3-month lows. Let's see how it plays out. But for the time being, we're putting the spotlight again on a corporate conversation. Texmaco Rail has formed a joint venture with RVNL. This is a 49-51 JV where Texmaco Rail's share is going to be 49%. And this JV is going to focus on manufacturing and maintenance of freight and passenger rolling stock. Joining in to talk about this is Sudipta Mukherjee, Managing Director at Texmaco Rail and Engineering. Mr. Mukherjee, thank you so much for joining in. We also have with us Manish Agarwal, Principal Executive Director, Mechanical at RVNL. Mr. Agarwal, welcome to the conversation. Thank you both for being with us. So, gentlemen, we really want to understand this. I mean, I think the equity component that Texmaco has put in is less than 5 crore. It's not about the equity you've put in right now, but really what is the purpose? And that's what we want to highlight on. So, let's put 3 points up for our viewers. We want to understand the synergies from this joint venture, the growth opportunities that come by it, and how this strategic partnership can perhaps enhance and further value creation, and how confident the companies are of normalizing the execution and the improvement of wheel set availability. So let's start by first understanding the JV itself, the thought process, the rationale. Independently, both of you do work for the railways. Mr. Mukherjee, Texmaco anyway has been producing rolling stock, right? So why the JV? What does it bring to the table? And what happens to the business that you will bid for independently? And what will be bid jointly through this structure?
Good morning. Thank you to start with a very thought-provoking question, which will set the ball rolling for the whole discussion. See, you have to run it through from the context that the infrastructure related story or the India growth story, that is one which is a big context. And of course, globally also, we find the same similar momentum in certain geographies in the present situation, that nobody is able to ignore the very part of infrastructure and making it more capable for the geographies. So we both play a significant role in our own capability in the domain. But when you talk about scale and reaching to newer markets, so this JV is kind of a association which will hold a tremendous potential to unleash further new markets in terms of having more capability and putting it forward for the new India. And that's why we want to define it that it's a very unique public-private initiative. And
absolutely. Sir, but some more specifics will help, sir. Shareholders need to understand what the rationale is. And again, I go back to that central point. This JV, while it looks at opportunities in overseas markets as well, I'm sure it will also bid for Indian railway opportunities. So then, how do you split it up? I mean, what business will be bid through the JV, and what happens to the independent work that you're doing, the rolling stock that you're producing for the railways?
So I come to the last part of the question. There is a non-compete. We are not going to enter into the domain of RBNL, or RBNL is going to enter into the domain of Texmaco. So far the core businesses are concerned. This is more related to the areas which is beyond that what today we are doing. Per se, from the perspective of Texmaco, there are certain turnkey projects which are coming up, including the maintenance of the rolling stock, and also, when we talk about rolling stock, it's not only freight wagons, it is the passenger mobility and also the locomotives. So those are the areas where we want to work together from this JV in terms of the whole life cycle of the product, right from manufacturing to service and maintenance. This is one of the key factor in the JV which we are looking forward to. And Texmaco brings the manufacturing expertise in and around what RVNL is doing. And we together, we believe that we will be able to execute and look forward to such such kind of opportunity.
Right. Mr. Agarwal, let's ask you and put it another way. Have you set yourself a revenue target for this joint venture and a timeline by which you would achieve that revenue?
Very good morning to all the viewers of your esteemed channel. See, this JV partnership has been envisaged to leverage the core strength of both the companies. Rail Vikas Nigam Limited, as you know, has been in the forefront of providing the railway infrastructure, and now recently we have branched out to other areas as well. Coming to the revenue part, our initial target is about 5,000 crores, but we have not spelled a very definitive timeline because the company is still in the formative stage. We are looking at various areas, as mentioned by Mr. Mukherjee also, which includes locomotives and rolling stock consisting of both freight as well as the passenger mobility. So we are quite hopeful that once the ball starts rolling, we will have adequate business under our belt to gradually transform and increase our revenue.
5,000 crores is what you are targeting from this joint venture. You haven't set yourself a specific timeline, but I'm sure there is a rough range that you would have, right? Is it 3 to 5 years, 5 to 7 years? You can give us a broader range. The street will be happy with that.
Yes, initially we are targeting a 3-year period because there are certain low-hanging fruits which we feel that can be accessed and can be taken care of quite quickly. We have certain opportunities in the African continent. As far as RVNL is concerned, we are looking at this JV, a major part of it coming from the overseas market. And Africa is one country where we find there are a lot of opportunities. So in the next 3 years, we are looking towards fulfilling these requirements.
Mr. Mukherjee, I'm looking at some estimates on the street in terms of wagon procurement from the Indian Railways for this year. It dipped quite a bit last year. In FY25, I think it was only 9,400 wagons ordered. One estimate suggests that this year it could be as much as 38,000 wagons that the Railways looks at procuring. So when you talk of an opportunity like this, will you be addressing the Indian Railways opportunity independently through Texmaco Rail, or will it be via the JV now going forward?
It will be independently through Texmaco Rail. It has nothing to do with the JV.
Okay.
And JV is, as I have mentioned, it is beyond whatever we are doing today. It is for newer markets, newer reach, and new combination of business.
All right, Sudipta, since we have you with us, let's tell us a little about execution right now. Wheelset availability was a bit of a problem. We spoke with Titagar last week as well. They did say that it continues to be a bit of an execution problem. Would you concur with that? And what are you doing to improve that? What's your execution timeline for the year likely to be? X of this JV, obviously.
So for us, we would like to mention clearly that for wheel sets, we do not want to change the guidance. We had done a top line of 5,100 crores last year, and we are confident that we will do better in the top line as well as the bottom line. And regarding to the wheel thing, it is only limited to the production of the railway wagons, which is being ordered by the Indian Railways. But although there was a crisis in between, but now it has improved a lot. A right combination of Indian Railway orders and the private and export orders will be handy for us in the way forward to make successful our plan.
All right. So I was just saying, no problem in terms of wheelset availability. You are expecting revenue to grow this year and profitability to grow as well. And Manish, on RVNL, first quarter margins were at a record low. 1.5%. Do you expect them to improve? What's your overall guidance for this year, X of this JV?
Well, the margins had dipped, no doubt about it, because as you know that earlier, primarily we were handling railway projects only, and that too on nomination basis. But as per policy shift, we are now bidding in open market and securing projects. So this particular procedure has started in the last 1.5 to 2 years, and the projects that we have now secured, they are gradually maturing, and we are certain that in the coming times, the margin and the revenue are going to improve.
So just one final question, for Mr. Agrawal. You said that the revenue potential from this JV could be 5,000 crores. By when will you be coming up with the first bids when you identify opportunities and projects? Should we expect it in what, 2, 3, 4 months, longer than that? When do we see action on the JV?
Yes, after signing of the JV yesterday, now we will be in the process of completing the incorporation of the new company. And at the same time, we, as I mentioned earlier also, that we are scouting the overseas market initially to get hold of certain projects, particularly in the African continent. And we are sure that in the coming 3 to 6 months, our bids and our forays into this area will start.
Okay, all right. So perhaps some more revenue opportunities to start off with from Africa in the next 3 to 6 months for both of your companies. Thank you very much for joining in and giving us some perspective on this new joint venture, as well as, of course, the existing business. That's Texmaco Rail and RVNL. Well, with that, let's head back to Sudarshan. Sudarshan's been, of course, looking out at these IndiGo blocks. And by the way, as we toss it to Sudarshan, some good news for the Nifty as well, from a drop of over 200 points. And there's some stability that's coming in. And the Nifty has managed to at least limit its morning losses for what it's worth, at least for now. But Sud, tell us more about those IndiGo deals.
So two things. First, block deal that has happened. The size is less than what we expected, but the price at which it happened is higher than the floor price that was expected. So what has happened? Block deal has happened for 2.2% equity, and that has happened at rupees 5,838 per share, and that is worth rupees 5,030 crore. Now, sources say that block deal size has been reduced from earlier size of 3.1% that we had from the excess that we had to the term sheet. That indicated that block deal size was expected of 3.1% equity. But as of now, the block deal has happened for 2.2% equity. And so it's been reduced. Earlier, floor price was rupees 5,800 per share, and total size was rupees 7,027 crore. So we'll have to wait and watch if there is another tranche of block deal. But as of now, the size has been reduced, and it has happened for 2.2% equity instead of 3.1%.
Okay. All right. Got it, Sudarshan. Thanks very much for that. With that, I think we have to slip into a very quick break. Come back on the other side. We'll have lots more lined up for you, including a conversation with the management of BLS International. They'll be discussing this 2,000 crore rupee order that they have won from UIDAI.
Welcome back. One of the stocks that gained on Tuesday's trading session in an otherwise wobbly market was BLS International Services. And the reason for that was pretty clear. They received a near 2,000 crore order coming in from work order coming in from the Unique Identification Authority of India, better known as UIDAI, for Aadhaar centers. Shikhar Agarwal, the Joint Managing Director of BLS International, joins us. And obviously, the conversation will be focused on three important points. The first one, the company's execution plans, the volume risks under UIDAI order. What's the outlook on the margin post this order? And finally, the visa business recovery and the growth visibility on the non-UIDAI or government businesses for the company as well. So let's talk about all of that. Shikhar, thank you so much for joining in. First up, this 2,055 crore order. If you could give us a sense on for how many Aadhaar centers is this, for how many years is this, how will the revenue recognition on this be, and is this volume based? What are the kind of margins here?
BLS International is very proud to have won this landmark deal, which is the Aadhaar Seva Kendra, which is the golden project of UIDAI, wherein we will have to set up around 300 offices across different parts of the country, and to enable Aadhaar enrollment, biometric enrollment, renewals, update, etc. These are exclusive centers being set up by UIDAI in India. And the reach is going to be phenomenal this time. Under this contract, we have to maintain Aadhaar Seva Kendras, operate, set up infrastructure, etc. We have to employ around 3,000 people. And the revenue potential from this contract is to start with more than 2,000 crores in the next 6 years.
Over the next 6 years. So this is a fixed revenue, or is it basis the volume that you generate on these Aadhaar Seva Kendras?
Last year itself in India, my estimate is around 17 crore Aadhaar transactions happened. This model is based on per transaction as our business model. So we expect the number of transactions to be generated to achieve 2,000 crores of revenue over the next 6 years. It's a per transaction model, and the margins that are expected are around 20% from this entire contract.
And what are the volumes that you're expecting over the next 6 years that gets you to this 2,055 crore revenue?
Volumes, we are not exactly sure. We know the revenue that we will generate. Last year in India, as I said, around 17 crore transactions happened. I think upwards of around 2 crore transactions every year is something that we are expecting from this contract.
Yeah, but I guess it's a bit of straight math as well, right? If you're saying it's a per transaction model, then you need to be confident of an X amount of volume to generate this 2,000 odd crores over the next 6 years. Which brings me to the question of competition, Shikhar. Now, how does it work? I mean, what are the geographies that are being allocated to you? And you need to be in very unique geographies as well, right? Because if there are multiple Aadhaar Seva Kendras at banks or other, post offices, etc., then that much more competition for your Kendra. And therefore, the chances of lower footfalls. So how are you mapping this out?
Correct. So these are exclusive centers being set up by UIDAI. Currently, they had 70 centers across India. Now they're taking it to 300 centers that we will set up in India. And these are exclusive centers by UIDAI. So these are the only centers by UIDAI in the entire country. And this is the minimum volume that we will generate from this contract as per the tender that we have filed with the government. But as I said, the volume expected could be much larger as the number of transactions grow in the next few years and the change in regulations come. That is why, I feel even the contract value can even grow further.
Got it. So basically what you're saying, these are newer centers, unique centers in that case, and then within a certain radius, perhaps, I don't know if you have the number, there will not be another Aadhaar Seva Kendra. So no issues there.
Correct.
You mentioned 20% margin on this kind of a contract. So does that kick in from day one itself, or is it a 20% level you get to it as the scale and the volumes grow?
Definitely, this project is a big project, so from day one, they give us time also between 6 months to 1 year to set up all these kendras across different parts of the country. So definitely, from day one, as the volume grows, as the volume starts coming, the margins will also start coming in. So at least in 1 to 2 years horizon, definitely the margin should come in.
The other thing is that what is the penetration of Aadhaar right now in the country? If you could give us a sense on, because in the 70 centers that are already there, a large part of the country has Aadhaar cards. And this is not something that you make again and again like a Schengen visa. So with the 300 centers that you have, are those areas already penetrated with Aadhaar? On what basis is your volume estimate? It can't just be because last year it was 17 crore this year will be that much because those 17 crore are made and done with.
No, but every year there is updates of Aadhaar, there is new enrollments, there is change in birth name, etc. So these transactions are historically growing, So every year we see, big uptake in transactions, and that is how we have thus won this contract on minimum guarantee of volume. And these are exclusive centers by the UIDI, So this is probably like the Passport Seva Kendra, wherein they have exclusive centers to renew passports. This is by the UIDI to exclusive centers to renew Aadhaars.
And you said minimum guarantee. So the government, irrespective, the minimum guarantee that you have is of 2,055 crores over the next 6 years, right? Anything over and above that would be positive.
Correct,
a bonus.
Correct. So this is the revenue that is expected to generate over the next 6 years. On the basis of this, we will be doing our entire investment, etc. And as the volume grows, this project has a scope of even increase in the revenue.
All right. And your non-Aadhaar business, the non-government services business, the visa business, if you could give us a sense on what's up next out there, any new centers coming in, any new countries opening up for your services as visa centers. What's your outlook on that one?
Yes. So see, if you see our first quarter revenue, we achieved 710 crores revenue and 180 crores of profit, which was a 50% growth compared to similar quarter last year. So definitely, a lot of new contracts that we won over the last 1.5 years, we have deployed. As I said, there is multiple tenders that we are bidding for. We are winning, continuously winning tenders. Having said this, Aadhaar Seva Kendra 2,000 crore tender also that we have recently won. There are multiple tenders in international geography that we are eyeing for. So definitely we feel that with the market penetration and our global reach now, we are continuing to maintain our growth momentum.
Right. Shikhar, just two clarifications. One, to Mangalam's question, new Aadhaar changes made, you get paid all the same. There's no difference.
See, I don't...
To make a card from scratch or to sort of effect any changes in terms of updation, etc., there's no, BLS gets paid the same. There's
Correct. Our service fee is, as you know, our model is per transaction based. Even our visa counselor services, even in this contract, it is per transaction based.
Okay.
For us, our service charge remains the same.
Okay, fair enough. One more question from my side. We are seeing a sharp reduction in, for example, student arrivals, etc., in the US. We'll have to see. We'll have to track how this kind of goes. You don't process any visas in any country, I think, for the US, but you do so for many European countries, etc.
No, we also work for the US government in many countries around different parts of the world with our partner. So GDIT is an American company. So we have partnered with them and we are delivering US visa services from multiple countries in different parts of the world, but not from India.
Oh, I see. Okay, BLS directly does not, but through your partner you do.
Yeah, so has that delivery partner as this happens? So we are delivering US visa services in multiple countries in different parts of the world.
Okay, and in your numbers, how does it show the US as a proportion?
See, we started this business only in September last year, wherein we scaled up to many countries. So definitely the volumes are growing. I need to check exactly if there's a big change in volume, but for us, we have not seen any big change in numbers in the countries from where we are operating.
Okay. All right. Shikhar, one last question. Just to get back to the margin profile. Now, your Aadhaar business is going to be a 20% margin. The rest of the business so far, in good quarters, you've gone to as high as 30% margin as well, right? So give us an outlook. 1 year down the line, when your Aadhaar business is fully functional, at a blended company margin level, what will the profile be? Will it be slightly margin dilutive?
See, if you see our margins in visa business, as you said, it's upwards. If we do segment reporting now, so our visa business margins are upwards of 30-35%. If you see a consolidated blended margin, last quarter was around 27-28%. So definitely blended margins will be little less. I need to check the exact numbers, but visa business margins will continue to remain steady. But definitely there will be a big jump in revenue. This 2,000 crores of revenue we will be getting in the next 6 years. Our reach will increase. So definitely blended margins, we need to check, but this business is at 20% EBITDA margin. So there will be a little less blended margin, but visa business margins will continue to remain steady.
Take that point. Thank you so much, Shikhar, for joining in and giving us your views. Wish you good luck with this and more Aadhaar to everyone, all the centers that you open in as well. I don't know about your business or not, but you bear good news for the market. The Nifty is now back closer to that 24,600 mark. So there's been a sharp recovery from the lows. It's been led by the banking names. It's also been led by increased purchase in the consumption names. So pull up something like a Titan. That's moved to the high point of trade, a recovery of 1.5% from the lows. L&T, a fair weight on the index, also has moved higher as we speak, and we are seeing some traction in names like Asian Paints and some of these financials. So we have Bajaj Finserv and Bajaj Financial, which is up close to around 1% from the lows, though some bit of profit taking on a name like HUL, which is currently at the low point of trade. So there's a recovery of almost 330 points on the mid-cap index, over 500 points on the Nifty Bank, which is now sitting with a cut of just 300 points, and the Nifty sitting with a cut of just about 100 points. Perfect time to get Vinay Rajani, the senior technical and derivative analyst at HDFC Securities, joining in. Vinay, a lot of calls written yesterday. Now the Nifty is recovering from the lows. The put-call ratio too had moved to a lower range of 0.7. Do you sense any recovery coming in, or do you believe that this recovery that we've seen from the lows will be sold into once again?
Yeah, good morning. So yes, definitely derivative data is suggesting some sort of oversold scenario for the markets, and for the entire series, Nifty has underperformed the emerging as well as Asian markets. And we have seen already 650 points correction from the recent high of 25,153. So definitely positional charts have turned weak. Nifty is now trading below 2050, and it has also breached the 100 days EMA. So definitely the positional setup has turned weak. Previously, we were expecting 24,800 to act as a strong support, but now that has been breached, and now that can act as a strong resistance. So positionally, we believe that unless we see a decisive close above 24,800, one should remain cautious and take a bearish stance, and intraday pullbacks can be utilized to go short again. So 24,800 should be the stop loss in short position. As far as support is concerned, we believe that previous swing low of 24,340, around that level, there is a strong support. So definitely there could be limited downside positionally, but as of now, it looks like that going by the entire month, today's expiry could remain under pressure only, and intraday rally, I think, will find supply at higher level. Overall, 24,340 is a strong support, and 24,800 is a strong resistance for the Nifty.
Okay, all right. Also, just run us through your stock calls. Any particular trades for the morning?
Yeah, sure. So IT stocks today showing some weakness. So there is a fresh breakdown in some of the IT stocks like HCL Tech, which is after some pullback, it has again resumed its downtrend. So HCL Tech September future, I would recommend to go short around 1466. HCL Tech September future can be shorted, and stop loss I would suggest around 1486. On the downside, I'm expecting a target of 1435. On the long side, I would take a long bet on the auto space or Minda. So Minda has done exceptionally well and has remained resilient in the downfall of the market. So Minda is looking strong technically, around 12891 can go long. I would suggest a short-term stop loss around 1270. On the upside, we can expect a target of 1325. So Minda on the long side and HCL Tech on the short side.
All right, we'll leave it there. Vinay, thanks very much for joining us. Good getting that. We'll take a break. Ramdev Agarwal, Chairman and Co-founder of Motilal Oswal Financial Services, on the other side to talk about the impact or the lack of it on earnings here in India because of US tariffs. Stay tuned. Welcome back. As promised, let's now go across to Ramdev Agarwal, Chairman of Motilal Oswal Financial Services, who's joining us. Ramdevji, great to have you with us in the program. Can I see a lion behind you, or is that a cheetah? Because you are coming to us live from Kenya, I believe.
Yeah, it's a beautiful weather here and a lot of animals all around, and I think there is a lot of action in Mumbai.
But it's.
I think it's the
action
first time they would want the animal to be a bull and not a lion or a cheetah or
just
anything
need more
else.
bulls in Mumbai.
More bulls behind Ramdev than just
I think
lions.
The biggest bull is in
He's
Kenya.
in Kenya right now, one of the biggest Indian bulls. So yeah, we had to get a bit of Ramdev ji back on the screen because the market needed to hear the bullish voice.
But there is Ramdev ji, thanks for joining us. I know you're on a break.
Yeah.
But how do you assess this entire situation? The tariffs have taken effect, 50%. Obviously, this 50% cannot be permanent. This 25% additional will go away. We don't know when, though, right? Timelines are hazy.
Yeah.
So your first thoughts?
Yeah. So actually, these are historical moments in this global relationships and geopolitics, economy, whatever. It will be remembered for a very long time. And since these are passing moments, deals will happen. I mean, there are two big countries that it is impossible that deals will not happen. Deal will happen. On what terms, when? There is some kind of a flux. There is an uncertainty. So, of course, markets don't like uncertainty, and hence, somewhat there is a kind of bit of uncertainty and sell-off in the marketplace. But my sense is, it has the only way to approach this subject is to figure out at our end what could be the impact on the earnings. Will there be a lasting impact? Will it be a deep impact? How big it will be? And then I spoke to my research head and all. They said, sir, at this juncture, if the deals happen in next 10, 15 days, 1 month, 2 months, they don't see any impact in the acceleration in the earnings. See, right now what is happening is that we had a 4 or 5 quarters of slowdown in the earnings in India. And I think we are just about, this quarter itself was 2-3% better. And as the fiscal, monetary, and the arsenal of reforms which are going to be unleashed in next few quarters, my sense is we are going to see earnings acceleration. And also I'm presuming that some sort of deal will be in place in the weeks ahead. So I would not, in fact, I would use this opportunity wherever I was left with some kind of a cash or liquidity. I would definitely use this opportunity to buy some of the stocks which are corrected at this juncture.
Right. Ramdevji, 2 questions. One, you said if it happens on the outside, it's a 2-month kind of window?
I have no idea.
No, I'm not asking when it will happen. I'm saying that beyond, because if it stretches for too long, then obviously you'll have to reassess. But at this stage, if it... is that the feedback, or it was a general comment? I heard 2 months on the outside.
No. I have no timeline, but I think both sides are in a hurry, and it will happen in the sense that it might be a few weeks or maybe a month or two. So in the overall scheme of investing, I would say this could be an opportunity, because if by chance market corrects by 4-5% more from here, because of what our headlines come, because the headlines are what drives, so there will be few days when the headlines will be like this, and there will be, kind of talks from both sides. Headlines will be coming from both sides, and there will be reconciliatory, headlines. And it is happening in the backdrop of global bull market across in equities.
Yeah.
Ramdevji, I just want to and we'll talk about that as well. But is there your team has looked at direct impact, right? But is there an indirect impact as well? A lot of the impact lies outside the listed space, but then that feeds through in terms of income hit, job losses, income hit, consumption impact, and then loans going bad, etc. as well. Is that something which, because these are very labor-intensive sectors? Go on, sir.
Prashant, you just can't. You can't just believe that there won't be any deal. I mean, I'm not taking a situation that there won't be.
Okay, I think we are losing the line.
There will be a
little bit.
How good of that? Whether it remains at 25% or whether it somewhere kind of thing comes. So we have to assess only when the final
I think that's a bit of a scratchy line.
Let's do one thing.
We'll try and connect
Yeah.
it. So if you can hear us, I'll try this one time, and then if not, we'll reconnect. So your point is well taken that you believe there will be a deal. Now, it could be 1 to 2 months. If it is within 2 months, then maybe no real impact on the earnings acceleration and recovery that the market is currently penciling in. So my question to you is on the kind of money, because the only thing that's really helped the market in the last 8-9 months is domestic liquidity and firepower, right? It's been very steady with mutual funds. They still give us positive feedback when we ask them. But when you talk about HNIs and the non-retail, non-institutional money, what is that money thinking? Do you see a lot of money gushing in if there is another 2-3% correction?
Let's do one thing. Let's disconnect that line and connect it again. Maybe we get a better shot at hearing and seeing Ramdevji clearly. Let's do that. Why don't we can we take a break and come back? Yeah, let's do that. Let's take a break. We are back with Ramdev Agarwal on the other side.
So far, the recovery on the market has held. The Nifty is still holding with cuts, but they are a lot lesser than what we saw, say, about 30 minutes ago. So keep an eye out on a couple of these two-wheeler names. They've been doing well. Now they continue to do well. Hero MotoCorp, that outperformed earlier, then saw a bit of a dip, and that dip has been bought into, currently at the high point of trade for that stock. Eternal is doing well, but the largest contributor on the way up for the index has to be Reliance. It's up around 1% from the low, still marginally in the red. We have the all-important annual general meeting for Reliance tomorrow as well. We are in conversation with Ramdev Agarwal. We have him on a better line, hopefully, now from Kenya. Ramdevji, thank you so much once again. As Prashant was earlier asking, that there is the direct impact of these tariffs. And secondly, then there is a second-order impact. Now, on the second-order impact, you said that you refuse to believe that there won't be a trade deal. Even if there is a trade deal that happens, it is likely to be somewhere in the middle of the range, right? From 50 to, say, even if it settles, say, around 20, 25%, whatever it is, it'll still be higher than what we had earlier accounted for. What would the second order impact of that be, according to you? Because, there is textiles, gems, jewelry, and shrimp feed, etc., fairly labor-intensive sectors. Do you think there could be job losses here? There could be impact on consumption because of something like this?
It is too early to guess on the second order impact and things like that. Once the deal is in place, then we'll start assessing whether what will be the impact, because trade has its own way. I mean, I was talking to some gents jewelry guys. They're saying that, in fact, their claim is that they won't be impacted at all. So now you have to figure out how exactly they are going to do it. So I think the trade has its own way. The impact, I was talking to somebody yesterday, and he said, if it is 50%, then we'll lose 50% of the turnover. If it is 25%, we'll lose 25% of the turnover. So you can't figure out what will be the impact in particular company and the particular industry. And then it's not that only trade related thing is happening in the entire economy. I mean, Indian economy is on the move. We have so-called, as PM said, arsenal of reforms coming in. This is a time when government is trying to unleash reforms. And so you have to also look at it, because this is all going to happen simultaneously. Then there is a massive flow of the domestic participation. So you have to see, when you look at market, you have to look at everything. And that's why I said, instead of looking at what you call isolated things, let's look at it, what will be the impact on the earnings? Because the earnings are what is going to drive the markets, not and nothing else. So my sense is, if we have, say, 25% deal in next 10, 15 days or month or whatever, I think market has already calibrated that particular kind of thing, and the whole world is paying. It's not that we are only paying 25%, nobody else is paying. Even Pakistan, they have put 19, 20%. So I would think that it will be a new world, new world decided by the way America wants to treat the world, but world will find its own way.
Ramdev sir, your point on big measures from the government, right? And we've seen that. We've seen announcements, right, from income tax in the budget, and now GST cuts will be a reality, maybe around the Navratri season itself. But you see the market's reaction to these big changes as well. The GST cheer lasted for all of 1 week. And I mean, again, then the overall sentiment is so negative. Is there anything else that you would want from the government that can really spur the market sentiment back?
But there are so many things, so we can keep talking about it, in the sense that I mean, like, I am in Kenya here. I mean, when I see the possibility of tourism, I mean, we can do hundreds of billions of dollars of tourism out of India. But is there a focus on that? So we can go on sector by sector and see the possibility of non-financial, what you call, reforms, which are required to unleash this economy to its true potential. Education, I mean, the Indians are going all over the world to get medical degree or MBA degree. So can we, I mean, that might become $50-100 billion kind of services exports or import opportunity. In fact, we should be the university of the world, which is very easily doable.
No, absolutely, sir. And the government absolutely take your point. And the government has been talking about some of these sectors. So non-financial changes that can be, brought in. Finally, just coming back to the earlier question that I had on flows, because still now in this slightly dark patch, domestic flows have held the market together. Mutual funds tell us that they're still very optimistic on steady flows, steady SIPs. What about the non-institutional local flows? What's your sense there?
See, the bigger the pile of money, more cautious they are. So the HNIs, they will all be sitting on the fence till the market goes in new high. And when it goes on new high, they are the guys who will take to absolutely new high. So this is the nature of the things. All the institutions, since they are managed by the, what you call, risk-averse people, they will take their own time. Instead of cashing on this kind of a soft patch, they will come when the sky is blue and everything is clean. And hence, once there is no uncertainty, they will come in and make new high. So there is enough money sitting. You must have seen DI buying, say 4-5 years back was about 1.5 lakh, 2 lakh crores. Last year was 5.5 lakh crores. And in this first half itself, in last 5 months, I think we have already done about 3 lakh, 3.5 lakh. So I think we are headed for 7 lakh crore kind of buying in the current year just by DI. On top of it, what HNIs do, you know that it could be a matching number. So we have plenty of buying this thing. The only thing is our earnings should held. And earnings are not dependent only on US trade deal. Of course, there'll be some at the margin, somewhere $5-10. But I think the much bigger gusher of earnings are going to come from reforms. I mean, even the GST reforms, if it is done in right spirit, the way it is being done, say 28 to 18 and 12 to 5, or I mean, if it is done in a clean fashion, I think it is that itself is unleash a lot of earnings growth.
And in that program that we did, you made it clear, right? Time for tinkering is over. Has to be clear, directed, and make it low rate, simple, no real complications. And I think that will lead to many years of tax buoyancy, even if there is a one-time kind of a hit. In the immediate term, Ramdevji, is there a need to support some of these sectors through various measures?
Let the deal happen.
Yeah,
I think we should wait for the deal to happen and then decide what we want to do, because the power of domestic consumption is very big. Now India is no more a $500 billion economy. It's a $4 trillion economy with 62% domestic consumption. I think we can unleash it. And that's what I think PM and the government is talking about. And this is a great time, the back on the wall, and we can definitely do it. So I hope this, whatever little bit setback is there in the tariff issue, I think we should use it to not only get a good deal on tariff side, but also unleash the domestic side.
Take that point, Mr. Agarwal. Thank you so much once again for joining us from the middle of your break. Hope you enjoy the rest of your holiday, and by the time you come back, the markets will be in a lot better shape. And hopefully, we have the trade deal that you believe is imminent as well. And thereafter, there could be everything else that we need to watch out for. If the trade deal does not happen up until the next 2 months, he believes that there could still not be any hit on the earnings. 7 lakh crore is the DII money that he believes will come in this year. And no worries as far as consumption is concerned, because if the trigger of reforms are unleashed on consumption, then perhaps that could keep the buoyancy intact for our markets. With that, what we'll do is take a short break with the news that the Nifty is holding with cuts of around 150 points. Our special segment, It's the Economy. Lata joins in with Jahangir Aziz of JP Morgan to assess the impact of the 50% US tariffs on India.
Welcome to It's the Economy. The 50% US tariffs on India are now a day old, and the Indian government, of course, has been engaged in several steps, important steps to stimulate the economy more broadly, with GST cuts announced, imminent GST cuts. Economists in India haven't yet revised their forecasts lower in the hope that the 50% won't prevail for too long. But most expect the GDP will fall to below 6% from the current forecasts of 6.3 to 6.5 for FY26. Now, to understand the many-sided impact on the Indian economy and on other issues, I have with me Jahangir Aziz, the emerging markets economist at JP Morgan. He's joining me all the way from New York, so thank you very much for staying up for us, Jahangir. Well, first up, yes, do you expect the blow, if this 50% prevails for the second half of the year? One half is over for India. Will it take the GDP down even below 6?
Look, Lata, you've asked me this question several times over the last 2 years about India's GDP. I've given you the same answer, so let me give you the same answer back again. As long as India's GDP is determined by using this absolutely anachronistic wholesale price index and not producer price index, you have to tell me what is going to be global crude oil prices. If you tell me global crude oil prices is going to be $60 a barrel, India can achieve an 8, 9, 10% growth rate. So it is pointless discussing what is the overall impact on GDP. I think it is much better to look at the sectoral impact. And I think the sectoral impact is where It matters, and it matters a lot because the impact over there can be significant.
No, I agree with you that we are going to have a very good GDP reading, but are you expecting, therefore, that certain areas like manufacturing and jobs losses can be so severe that it cannot be mitigated by the GST cuts? The GST cuts is seen as a countervailing to improve consumption.
So I'll answer your first question later. Let me answer the second question first. If you're going to connect the GST cuts to this, then you have to also accept the fact that these are permanent tariffs. Otherwise, what is the reason of changing a permanent GST if you're not expecting permanent tariffs? I don't think the government is connecting the two of them. I think we are trying to connect the two of them. Clearly, if on September 4th or 5th, whenever the council meets, we get a reduction in the effective GST rate, it will have some impact. But to connect the two of them also implies our accepting that the tariff increase is permanent. If the tariff increases are not permanent, then there should not be any permanent changes in any policy measures. So I think the two of them are two separate events. They coincidentally happened at a time where the two of them matched. I think we are putting the two of them together to try and say that the GST cuts is a response to it. I don't think the government ever intended the GST cuts to be a response to it. Just happened to be coincidentally the same time. So I think one needs to make that distinction that, if you're going to say that the GST is cuts a response to it, then you shouldn't really use permanent cuts to do something that we think is temporary. At least that's what the expectations are, right? So that's the first thing. The second thing is that I think we need to pass the impact in a slightly more granular form than the way we have been doing it. So let's try with the basics, right? So 2.4%, roughly 20% of India's exports goes to the US. There are certain things that are exempt from the 50%, which is electronics, which is fuels and pharmaceuticals. That brings it down to about 1.7, 1.8% of GDP. If you take the value added of it, i.e. if you take the import content of that, then the impact is about 1.1% of GDP. Now, on the face of it, 1.1% of GDP doesn't sound much. But if you look at the sectors that the 1.1% of GDP actually encompasses, these are sectors that have very high employment connected to it, which are textiles, leather, gems and jewelry, non-electronics manufacturing. And apart from gems and jewelry, where the value added is pretty minimal, the rest of the sectors have very large value added and very large employment content. So I think that if you are going to get a impact coming from the 50% tariffs, and this is going to get concentrated on sectors like seafood, sectors like textiles, sectors like non-electronic manufacturing, gems and jewelry, then the impact on employment is going to be significant. It may not be very much on growth or on value added, but definitely is going to have an impact on employment. And that's the near-term effect. And of course, there's a medium-term effect, which is the impact it will have on FDI, which of course has plummeted over the last 2 years, and on equity flows. Okay.
Yeah, there is a capital market issue, a capital flows issue. Yeah. Therefore, do you think that it is worrisome? I mean, we were moving at 0.5% to 0.7% of GDP on current account deficit. This blow can be taken, you think, on current account deficit?
Yeah, I mean, look, the current account deficit is likely to rise. I mean, it's going to go probably 1.5% of GDP if the impact of the 50% tariff is significant on exports. Now, it will take time for